Today's market call is presented by FactSet, financial data and analytics powered by tomorrow. Hey, it is 1 o'clock on the East Coast. I'm not effing around. It's market call. It's Swizzle. It's Dan. Carter Worth in a minute. It's, what is today? The 11th of July.
Yeah.
Thursday.
Huge.
A lot going on. Throw that rundown up because we're not
Messing around.
I mean, I'll goof around later, but September rate cut and play clearly. As a matter of fact, Dan, I hear some people now talking about maybe 50 basis points.
Wow.
I'm not one of them.
Nope.
The great unwind of the high flyers. We'll see how long that lasts. And chart check on banks into earnings. Carter's got some work to do. And if we have time, which we typically do, little audience Q&A.
Yeah, let's do it. Hey, about the CPI.
Sure.
So this is kind of interesting. Like 1/10 of a point better than expected. You know, yesterday when we were talking about the rate cut odds in September, we were talking about what, close to 80% or so, right? So here we are now with just that, you know, slightly cooler number here, and now we have a 95-ish.
Oh, went up to 95?
Well, I think so.
Let's listen, you're probably right.
I
saw 86, pull it up, but look, I think that's now PPI tomorrow. I don't think it's going to be a huge deal, although you never know. We've seen some wild cards before, but you know, a lot of people are saying, okay, enough already. If you're data dependent, here's the data. It's been pretty consistent. Listen, nobody's talking about the cumulative effect of inflation, which, by the way, is the main reason I think his being
Jerome Powell
is, you know, they're feeling the pinch of inflation to the tune of almost 20% cumulative effect. However, that's where we are, Dan.
Yeah, so I'm just pulling up the Fed funds tracker here. And again, there's no probability essentially that we're going to have. I want to switch focus though. Yeah, so Guy, it's above 90% here, right? And so there's basically about an 8% probability that we have 50 basis point cuts. That's September. What do you think? Where is this signaled? Okay, so right now, you know, Fed Chair Powell just spoke for a couple days and we have this data here. Is it signaled August 22 at this Jackson Hole symposium?
Yeah, that's a good question.
So that's the thing that it'd be interesting to see, you know, what expectations are into that, because it has routinely been a moving event, right?
Yeah, but you know, Elizabeth Young Thomas has said countless times that it's not, again, be careful what you wish for in terms of rate cuts, because that's typically when the market starts to turn. And listen, we're going to look at the S&P and other things today, but you're getting glimpses of what that type of price action could be. And without sort of burying the lead here, I mean, some of the reversals today early on are massive.
Right out of the gate, right? All right, let's bring Carter Worth of Worth Charting in here. Hey, there he is. Carter, you are handsome. All right, let's talk about like what your takeaway is. And I know we're going to spend some time on yields here a little bit. Guy, there was just, maybe you want to check this out. There was a 30-year auction that just happened here.
Looking now.
Carter, you've been in the lower yields camp. You made a very cogent argument over the last, few months or so that as soon as you get to that narrative of higher for longer, it's sort of the thing that you want to be going the opposite way. You felt that way last fall when the 10-year yield got up towards 5%. It did not spend a lot of time there. It went down to 3.85 by the end of the year.
Yeah. Well, what? It just it became like a mantra. A mantra is a weird thing, right? When something is generally considered to be an accepted truth, and then takes on like a gospel or almost like a religion, it's not necessarily wrong, but it becomes probably, there's a British expression, too clever by half, right? It can't just all be, we're going to go higher and higher. And so the higher for longer really first crept into the vernacular and then really became almost a religion, a mantra, right when the stock market was bottoming in October of 2022. And rates have never gone higher, briefly higher. And so almost 2 years later, we're below where we were at the low of the stock market and the peak or the true crescendo. You can AI search the number of times, higher for longer was being spouted. Anyway, I'm a buyer of treasures. Do the
where do we get to? You see our trend channel here. Are we going to blow through that thing again? When you think about the lows from last fall or so, are we going to be testing those?
Yeah, I mean that's the question. I guess if we're going to do that, that would have to be something really meaningful on the slowdown side, right? We'd have to you'd have to have something on Main Street that corroborates that, or that the market is foreseeing. Again, it could also be that every utterance, starting with this person right here who's uttering and speaking right now, is all useless because the cost of 10-year money is just, hey, benign. Whether it's 4 or 4.75 or 5.02 or 4.25, that it's all just an elixir, a great thing. It's Goldilocks, and that is a very desirable thing for risk assets and for CAPM and for dividend discount models and enterprise value, EBITDA, and all the good stuff. My own hunch is ultimately we do go lower because things do slow down.
Guy, let me ask you this. Is it the banks that report tomorrow morning? We got JP Morgan, Citi, and Wells Fargo that might have a cautious, outlook as it relates to consumer.
They should. I mean, if you paid attention to listen to the PepsiCo call. I mean, that stock's probably unchanged, but that's a rotational thing. But in terms of some of the commentary we've heard from a number of different retailers, people that are consumer facing, most of it, predominantly, I'd say 80-85%, has been really negative and cautious. So I don't know how the banks can be anything but negative or cautious in terms of the consumer, ex-Bank of America, who's never basically found an environment that they're not optimistic in.
Yeah, so let's talk about just what we're expecting here for tomorrow morning. We have those three banks reporting their money centers, less dependent on capital markets and investment banking and the like. And so we have a couple 3% implied moves. We have, I think Amanda's got a slide here, and Wells Fargo expecting a big move, Guy, about 4.5% in either direction. JP Morgan about 3% or so, up 20% year to date. Look at the outperformance, I guess, to the S&P 500. They kept, they kept track of it or so. They're all, above those implied moves, are above those averages over the last 4 quarters.
JP Morgan is interesting because I know last quarter the implied move was, I think it was 3.2%. And I remember having a conversation with you because the stock at the time was trading at its all-time highs. And I said, it doesn't make sense to me. It should be more than that. And I think the move wound up being almost 8%, I think, on the back of earnings. And I do think, just like last quarter, I think this 3% it's too low in this environment, given the fact that we just made an all-time high of $210 and change the other day in JPM. So I don't know why Wells Fargo is more. Maybe it's a Wells Fargo specific thing. Citi never really does all that much. But JP Morgan, to me, is the outlier.
Yeah. So when we think about these, again, JP Morgan was down 6.5%. I think it was on April 12th when they reported their Q1 guidance. A lot of that was focused on net interest margins, but also what Jamie Dimon had to say about it. Carter, you brought some charts here. You want to kind of look at some of these names relative to the KBW Bank ETF. Run us through what you're seeing. And then obviously we'd love to get a sense of how volatile you think this sector is going to be to start off Q2 earnings season.
Yeah, I mean, big day today, and shame on us. We put out a note yesterday, which was a follow-up from a note in March. March buy banks, they weren't popular then, and now we want to come out, go flat. That was the saying: go flat, no longer be overweight. That some of the good eating's been had. But a big day today, news related. Of course, the question is with today's gapping up, and we'll look at a few charts next. With today's gapping up, are you going to get follow through earnings related, or is today's gap already cannibalizing the perspective of gains associated with good news? And then, of course, if it's not good news, today's gaps all get filled immediately on the open tomorrow, if and as the numbers are light. But the story of the market as it relates to financials, you see, of course, that it's the big banks that have been leading the sector. That's the blue. That the sector's got Berkshire in it, and Progressive, and Allstate, and MetLife, and Goldman, and American Express. And then, of course, lagging, but really torquing recently, is the red line. That's regional banks. And in fact, if you could do anything, I'd have a pair trade KRE long, KBWB short as a ratio trade. But let's look at some of the charts. So this is the KBWB. It's just trying to inch above the downtrend line, in effect, since the peak in 2022. Another way to draw the lines. So does it get all the way up? And we can flash those two back and forth, sort of at the trend line. Does it not? Does it not? But to get back to the 60 level, that would be about all, if you're bullish here, that one might expect. I think the circumstance is quite similar in the KRE. You'll see here, we can flash that as well. Look where the overhead supply starts. So the overhead supply, not a room to run before you encounter presumptive sellers from above who still are smarting from losses associated with the bank's the Silicon Bank or something. Anyway, and then finally XLF, right? And so XLF, very similar to the market, but the financial sector, think of it, this is important. The S&P is well above its late 2021, early 2022 high, whereas the financials are not. And so we'll see if we're able to break out in a meaningful way. My hunch is that we just are stuck here, that the sector is a pair of twos.
It's interesting because, we're going to talk about the Russell in a second as well, but the small and regional banks, I mean, if you start trying to connect dots here, lower rates theoretically should be supportive of small business, right? They have the most to gain. Small businesses are serviced by small and regional banks. Those have underperformed in a higher interest rate environment. There is a rotation going on. So you can make the leap that not only can the Russell rally, as Elizabeth said yesterday, by the way, but you could see a bounce in some of these small and regional banks. Now, I think that's a bit of a stretch, but I would understand sort of the mechanics behind that.
Yeah, no doubt. It's interesting, Carter, like that you have that pairs trade on, or you're thinking about it, especially given the underperformance, obviously, that we've seen in the regional banks. But I'll just say this, if that unemployment is going up meaningfully above 4%, which, Guy, you think that in a slowing economic environment, we could see that. I think it's greater than 50% of jobs in this country are
I think it's
small,
actually, I think it's like 65, 70%. Okay. Yeah, but point taken. Yeah.
Yeah. And so, again, it's interesting that you're posing it in that way. Carter, before we let you go, we just wanted to get a quick take on the ITB. This would be the Homebuilders. I think Amanda's got a little bit of a slide here showing the performance today. Pretty dramatic. Again, if you're pricing in greater than expected interest rate cuts, that this should be good for mortgage rates and the like. You see the performance of those names right here. How's our little channel there? We use a 200-day moving average. You're focused on 150. Would you expect this thing to break out after the sort of price performance we're having today?
Again, it's a bit knee-jerk, right? And that's what we could say everything is, because a lot of gaps today because of the news. And was it news? It wasn't that big a CPI event, but either way, look, my hunch is that those April highs are in for a while. And so buy, sell, hold right here and now. My hunch would be to fade today's move in Homebuilders.
And I'll sort of chime in there. I agree. And, I've thought for a while that the obvious sort of mechanics around Homebuilders are lower rates, higher Homebuilders. I get that. It makes sense. But what I've said for a while now is I think that pendulum has swung to the unemployment rate. I think the unemployment rate is what you have to watch on the back of these homebuilder stocks, because I thought the existential risk to this trade for a while has been the unemployment rate to go higher. And I think as we start to see that, I think people come to the realization that, wait a second, more inventory, almost by definition, it's going to find its way into the market. Unfortunately, on the back of people losing their jobs. I'm not wishing for that, but I'm just trying to figure out how the whole thing sort of works.
Well, especially when you think about, 2022 was that kind of year of rationalization. We heard that again and again, and it went right into 2023. Sentiment was really bad heading into Silicon Valley Bank. No one saw that coming, obviously, but that was a function of interest rates going higher than many people expected in 2022. So you think about that. We're also pricing in a recession that never came. So, Guy, maybe the recession comes now. Carter, we really appreciate you stopping in. We hope you have a great weekend. We'll see you next week on Tuesday. All right, see you, brother. Hey, so Guy, a lot of what we've seen over like this, we're seeing rotation, right? We talked about these rotations a great deal. To your point earlier, what Liz talked about, once we start getting a rate cutting cycle, we might see outperformance by the Russell. She said that just yesterday. I want to show you a chart, though, on large caps that we found here. This was from Orion, and they're quoting Strategas here. This is the change in S&P 500 earnings 12 months after the first cut of a Fed funds rate cutting cycle. You see that going back to 01, down 30% year out. We saw in September 07, down 24%-ish, down 19% in July of 19. And, on average, it's been about 10% or so.
Yeah, and 95, again, being the outlier that we've talked about a lot of different times. Like the 95 is sort of the thing that everybody wants to look back on and say it most resembles 95. And they want to say that because obviously they were able to sort of thread that needle. The rest of the time, not so much. And again, this is what Liz said. I've said it for a while. Be careful what you wish for in the form of rate cuts, because you might get it and you might be surprised by the subsequent performance of the market. And in terms of, now let's get into some of the reversals we're seeing.
Yeah.
I mean, again, there's a lot of time left today. I don't want to make a huge deal out of this, but today the S&P 500, for example, did make, in fact, an all-time high. It's currently trading 55.85, having traded up to, I think, 56.42 and change today. So keep an eye on that and the reversal there. And in individual stocks, and we flagged NVIDIA back on June 20th. We said it was very similar to March 8th, and it's actually doing exactly the same thing that it did in the ensuing weeks after March 8th. It's doing the same thing now in NVIDIA, and you're seeing it at a host of names. You mentioned Walmart. Again, I don't know where Walmart's going to close. It made an all-time high today. It has reversed lower. So you have to take these things into consideration. The one thing I will say that's, I think, encouraging is the fact that the VIX is actually somewhat under control. It's only just north of 13. Again, on a day where the S&P was down 0.8%, I thought the VIX probably would be higher. Again, there's a lot of time left in the day.
Yeah,
so
let's see what happens. Again, I think Liz was quoting that stat. We're probably about 400 days, Guy, without a down 2% day in the S&P 500. I want to actually kind of tease this out a little bit, some of the rotations. We'll get to the Mag 7 a little bit, but the S&P, like you said, it's down a little less than 1%. Look what's going on with the RSP, right? That's the equal weight S&P 500. It's up more than 1%. And we see what's going on here, right? So I'm looking at Apple down 2%. I'm looking at NVIDIA down 4.5%. I'm looking at Microsoft down almost, 2.3% or so. Google down 2.7%, Amazon down 2.5%, and then Meta, down a little more than 3%. So what's going on here is that the names that have been driving the performance in the stock market, right, are reversing really hard. And I just I guess I posed this question on our Fast Money call just a little bit ago. If in 2022 or late 2021, when the Fed signaled that they were going to start raising rates, to kind of tamp down inflation, it was long duration stocks and the like here, assets that got hit really hard. And that was some of these names. And so why would they be going down right now, Guy, as the Fed is very likely to start cutting rates in the not so distant future? That doesn't make a lot of sense.
No, it doesn't, unless it's just all about rotation, right? I mean, I think it's just as simple as that. The underperformance of the Russell, the underperformance of the transports and some of these, and we just had the whole conversation about some of these small and regional banks. No, intuitively, it doesn't make sense. But then if you start to think about what's going on, if in fact you're seeing the beginnings of a meaningful slowdown, and it's not just sort of thread the needle, these names are not going to be, they will not be they're not going to be immune to a broader market sell-off.
Yeah, no doubt. So Amanda just kind of flashed up that Mag 7, or there it is right there. And, listen, Guy, you and I, let's just use a Meta as an example. It had that big gap lower after it reported earnings. I do think that the timing of this sort of performance out of these big names is very interesting. We highlighted on many occasions that, heading into Q2 earnings last summer, right, the noise in and around what companies were using generative AI, there was a bunch of product announcements, there was a bunch of pricing. I know Microsoft did with Copilot. We had names like Adobe, which that couldn't get out of its own way really since then, pricing of Firefly. It just seemed like it was reaching a fever pitch. Well, I think we could all agree over the last week, the way all of these stocks have been making new all-time highs on a daily basis. I think Apple was like 7 consecutive days. We were seeing, the same thing out of like Microsoft or whatever. So my question to you is, like, as we get into Q2 earnings and start to hear Q3 guidance, we got to be likely to be disappointed. And the fact that investors kind of hit the sell button so quickly today, it would make me a little nervous about this grouping of stocks.
Yeah, whether it's, again, human beings or other things at work here. I mean, the speed with which these things have reversed should be concerning, because I think you're seeing firsthand how quickly things can turn to the downside, and the speed with which things turn and the volumes associated with moves to the downside as opposed to moves to the upside. I mean, typically the volumes are a lot more robust when things are going down. And that's just historically true, but that should be concerning as well. But again, when you layer all that on top of, again, we say it 100 times, valuations are not a timing mechanism, but you have to take them into consideration. When you layer all that on valuations that are clearly stretched, other indicators that are clearly stretched, you have a bit of a witch's brew, a term we haven't used in quite some time.
Wow, in a long time. Really quickly before we move on, I want to look at the IWM, the ETF that tracks the Russell 2000. If you just look at this kind of 1-year chart, you see that 4-month sort of downtrend that's been, but really it's been going sideways, right? If you take the price of where it is right now, it was very near where it was late March.
2 years sideways action. Yep.
Yeah. Okay. And you've highlighted that a little bit. Let's go to the 5-year chart. So even with today's, kind of gain, you just see, guy, that we're like, okay, maybe we're making a little flag, and we're making this flag above those prior highs where we failed on 3 separate occasions over the last kind of year and a half or so. What does this chart look like to you? You highlighted what Liz said in a rate cutting cycle, how small caps might start to outperform. We've also talked about the KRE, the small cap bank index. We know a lot of those sorts of names are in the IW.
So here we are. So 211.88, I think, was the 52-week high this year in the IWM. We got close to it. We're right there effectively. Let's just say that. We've talked about this 2-year sideways action a number of different times. What I think is playing out here is you could see a continuation to the upside in the IWM here. You're going to get into a level of exhaustion, and then I think the small caps are going to figure out, well, wait a second, lower rates we think are good, but if it's on the back of slower growth and job loss, it's what's going to sort of offset. And I think the offset is going to be to the favor of slower growth and job loss, and I think these things are going to sort of reverse lower. But I think you have to let it play out over the next week or so, if in fact what we're seeing is what I think we're seeing, a huge rotation out of these large mega cap names into some of these smaller names.
So let's go to one of these large names. A headline hit today, and relative to the rest of the Mag 7, Tesla was trading pretty decently this morning. And let's look at a day chart here. The headline is that this August 8th robo-taxi event is being pushed out until October. Let's look at the 1-year chart that we have right now, or maybe they can move it to 1 year right now. And if you just look at the parabolic move that this stock had, it got above, I think, $800 billion. It was up nearly 90% at the highs yesterday. It might have been a high today, a relative high, going back, let's call it 7-8 months or so. When you see that side of sort of price performance, guy, in a stock of the size of this, we did see it just in Apple, by the way, you know what I mean? But what does that say to you? It doesn't take much of a headline to get the thing moving the opposite way.
You've mentioned a number of times that you thought that August date was sort of fugazi, and now it's proving to be the case. I mean, the stock Tesla got the sort of the lifeline it needed on the back of those robo-taxi announcements a few months ago, and it was sort of off to the races. What does it say to me? I mean, again, it speaks to what David Einhorn said earlier this year about sort of the market structure being broken. But when you see, again, you look at it today, it traded, I think, up to 271 today. It's now trading below 247. Big reversal day, obviously, on pretty big volume. I mean, that is again concerning. Now, we didn't make a new 52-week high like some of these other names, but we're right in the ballpark. So I would be, in a word, concerned, because again, you're seeing more of these engulfing patterns that are historically, if it's engulfing to the downside, it's bearish. To the upside, it's bullish. This happens to be on the bearish side of the equation.
It's funny. So the announcement about that August 8th robo-taxi event, guy, happened on April 5th. If they can just isolate those 52-week lows, that little period there,
that was a lifeline.
That was it. And in some ways, he just threw that out there. It started to leak that they were going to basically do away with their focus on the low end EV, that sort of $25,000 EV. And, the stock kept on going lower to new 52-week lows because China's like kind of really killing them a little bit on the very low end. And a lot of folks are really worried about like a BYD, which is a Chinese manufacturer, which is selling cars at a much lower price than Teslas with a much longer range. So then you see that gap. Okay, you know why that gap was? Do you remember that Elon got on his fancy little jet and he wrote, he cruised over to China, and he
went to India.
He came back with some fugazi announcement that the Chinese were going to kind of full self-driving was going to be allowed there or whatever. And you saw that big move, you saw that consolidation. Then people started getting a little nervous about Q2 deliveries. It wasn't as bad as people expected, but that delivery number kept on coming down. This last move, people were just excited about what was going to come in Optimus, which is like the robot, and then robo-taxi and all this stuff. So again, I'm surprised the stock's only down 6.5%, guy, which puts it flat on the year. So next week, 7/23, that would be July 23rd, the company's going to report thoughts into the print.
Well, I mean, if they have continued margin deterioration, the market's not going to like it, given the run we've seen. Almost we almost saw 100% run. I mean, was it 85% from trough to peak?
Yep.
I mean, that's
138 to 265.
We've seen, well, there you go. I mean, we've seen moves like that before in this name. And, the last time we saw it, it was a huge move. Everybody said you missed it. And then obviously led to the latest downturn that we saw into April. So the setup here into earnings, given the run, in my opinion, especially the fact that margins are going to be, I think, challenged, is not particularly good.
Yeah, I just want to make one point. Maybe they want to throw a 1-year Google, a 1-year Meta up there. You and I were talking about it earlier in the week on Market Call, that both of these names, relative to many other that are associated with Gen AI, they trade pretty cheap. But you also see that price action. You see how steep these performance, both of these names have been from the lows back in spring. So heading into the print, I don't think they set up particularly well either. We're going to focus on those a little bit, but we do like the idea of buying both of those on a bit of a pullback, because if the stock comes in, the stocks only get cheaper, Guy.
Yeah, well, we're going to see. Again, it all comes down to the price action. Karen brings this up, and it's interesting how people that have been doing it a long time can look at the same thing and come up with two different sort of summaries or observations. She'll say that we just got back to where we were last week, which is true. It's 100% true. What I will say is it's how you get there that's important, right? It's not necessarily
stairs up.
Yeah, and and again, when you see, I keep harping on these patterns, but they've happened a number of times now over the last couple months. It's sort of like those tremors you feel before the bigger earthquake, and I think all these engulfing patterns and individual names have been the tremors, and potentially the earthquake could come in the form of the S&P 500 action today, which again, as I said earlier, did make an all-time high today and is obviously reversed lower.
All right, so you just mentioned Walmart. Let's take a look at Walmart and Costco, and I wanted to put these in the context. They have nothing to do with the Mag 7, Guy. Okay, but they've performed really well this year. Both of these big box retailers, we've talked about the trade down here. Both of these names are up 30% in the year. So we have a lot of underperformance across retail. We've highlighted some of the trade down, and obviously, some problems on the lower end, consumer discretionary and the like. So when you see these two stocks making this sort of move on a day like today, there's some stock specific news in Costco, but they're kind of part of the same concentration.
100%.
Right. So talk to me a little bit about what you think in retail and these names in particular.
We had a conversation last night on Fast Money. The Costco news came out, and for the first time, I think in 7 years or maybe longer, they were raising their membership fees. And the initial reaction to the stock was it took it higher. They came up with some comps, I think, as well, some sales numbers for June as well that were good. And the stock was north of $900. And what I said was, it's interesting that they're raising prices now, because what I thought that was more of anything else was a tell on the consumer. Like, they have the ability to do so because people are flocking to them, because obviously that's where everybody's finding their way to in a very challenging retail environment, Walmart as well. The fact that we've reversed lower is again interesting too. So I think the Costco news was positive for Costco, but I think it speaks to a much larger narrative that's going on. The fact that the consumer has less and less options, and they're trying to find places where they can get value.
Yeah, so it's interesting on the membership fee thing. We've highlighted this. That is a recurring revenue. It's something that's pretty high margin. I'm sure the members actually spend a lot more money than non-members when they go into Costco, but it's not too different of a story, Guy, than let's say Tesla. We hear that like energy storage is doing so well. It's about 5 or 6% of their total revenues. And when you think about that for membership at Costco, it's not too different. So again, you like those sorts of revenues. You like the idea that they could become a much greater percentage of sales, but don't hold your breath for that.
No, I don't. Listen, that's not why they're getting the multiple. I mean, it's nice to have that kind of visibility, and that I think the retention rate for membership is like 94% or something, but it speaks to exactly what you mean. That's not something to necessarily hang your hat on. I look at it more through the lens of, again, what are they seeing where they feel like they can raise rates? And that to me is an interesting tell. Again, against the backdrop of dozens of retailers, consumer-facing companies that have talked about the weakness that they're feeling.
Okay, two more outperformers we want to hit here. Eli Lilly. Okay, this has been a freight train. It's nearly a 900 billion market cap. And then Novo, and we've talked about this, is not too different than the excitement that people have felt about generative AI, at least in the stock market, right? Crowding into some names, these GLP-1s, these, diabetes drugs, which are also being used fairly well for weight loss. And that's really what's driving a lot of the performance, guy. Novo Nordisk, this is a $620 billion market cap. Both of them down, not crazy, but like, would you lump these into those names? If there was a sustained sell-off, something like we saw last summer, might these two stocks have some room?
I think so. Absolutely. Because you say what you want about it. And by the way, I mean, if you watch Fast Money with any regularity, we were talking about Eli Lilly long before anybody ever heard of GLP-1s. And obviously when that came into the fray, it gave that sort of turbocharge to the stock. Now, if I'm being honest, which I am, for quite some time now, I thought the stock was way ahead of itself in terms of expectations and just in terms of valuation. For example, and this is just, again, Eli Lilly at its peak was probably a $900 billion market cap. It might have been just north of that. They're going to do $50 billion of revenue next year, which is good for them. Merck, for example, is little less than 1/3 the size of Eli Lilly in terms of market cap, and they're going to do about $68 billion of revenue. Now, it's sort of apples and oranges, but it's sort of not, because you're looking at two big cap pharma companies, and you're looking at one that's trading at a ridiculous price to sales valuation, the other one trading at a reasonable one. Now, you'll say, well, wait a second, guy. They have this addressable market that's going to be through the roof, and their revenues. Okay, that's the bull case. The bear case is competition is coming, perhaps. Costs are going to come down, perhaps, and maybe you're not going to see the commensurate revenue growth. So, as great a company as Eli Lilly is, it's not an indictment of the company. It's an indictment of the valuation.
Yeah, and lastly, I think there's a headline about Pfizer moving forward with the oral drug that will compete. I think a lot of people are kind of excited about the potential of oral drugs, so you don't have to stick yourself with a pen. All right, last single name before we get to a couple questions. Delta. When you talk about concerns about, let's say, consumers, Guy, how much do you want to place on a consumer here? The stock is rallied actually a couple dollars off the lows. I think it traded 42.5. It's trading at 44.40 or so right now, but that's down 5.5% or so, sitting at that 200-day moving average. Maybe they can pull this out to a 2-year chart, because I think it's interesting. I know that, we like to talk about what great trading stocks they are and the volatility that you'll see. Look at that move, about a year ago. That thing went up in a straight line, and then it took like a few months to redo that, but it was down and out. And then you have this other sort of
If you go back to 2020-ish, if Amanda can do that, you'll see what the range, it's been very well defined. The upside has been like 54-ish, and the downside has been like 35-ish or so, maybe a little bit lower. But yeah, but that was an anomaly. I mean, if you look at the sort of the recent lows, I want to say, yeah, actually you're right, about 31 and a half. So that's your range, and it's been very well defined. And we actually had a conversation about Delta, I think, yesterday, and I said, you know what? It's sort of scary here. You've had that sell-off from 52 or so. It's right in the middle of the range. It was sort of a pair of twos, and it turns out that was correct. I guess it's encouraging that we traded down to the moving average and bounced, but you have to let this play out. The history suggests that it's going to trade down to the lower end of the range. Now, I don't think it's a tell on the consumer, because if you look at the numbers have been very good. It's more a tell on how these airlines sort of run and how they're sort of operated. And the lower end seats, I mean, they're just not getting they're not getting the oomph on the lower end of things that they need to in order for the stocks to continue to go higher.
No doubt. All right. Do you want to take a couple questions?
Sure, I got one right here.
Yeah, let's do it.
So Jack asked about Pfizer, so we addressed that. So here's one from I saw one about the ITB. Give me a second.
Oh yeah,
where
would be the Homebuilders?
Yeah, IBB. No. Excuse me. What do you guys make of the strength today in biotechs like IBB? That comes from Situation Room, who's here every day. So I think, if I'm not mistaken, it's basically 4 stocks for about, I don't want to say 32%. It's Regeneron, Vertex, Gilead, and I think Amgen. If you look, Regeneron probably made an all-time high today. Vertex has been a great company, and Gilead is finally getting off the mat. So you're seeing the strength there. And I still think the IBB, and we've talked about this, I think there's some room to the upside, because all these names are starting to be, they're in play for a myriad of different reasons. So I sort of like the IBB
Pull
here.
it out to a 5-year because, again, you and I, as far as chart patterns, we love long consolidations. What did your old girlfriend used to say?
That's Louise Yamada. Yeah. She said like the longer in outer space.
Yeah, the longer hold on. The longer the base, higher in space.
Right. Okay. I don't know why I keep saying outer space.
No, I know.
Louise Yamada was I mean, I don't want to talk about her in the past tense. She's still with us, but I dug her. I mean, she's wacky as hell.
As a whip.
She had that tight ponytail, like,
and those glasses. You remember that?
She was Ruth Bader Ginsburg.
Yeah.
Of technicians.
Yeah, no doubt. All right.
Maybe we should make like t-shirts about Louise Yamada.
Let's do it. Back to the 5-year really quickly. Guy, there's no technical resistance after this breakout, right? Yeah. So that's really interesting. And I'll just say this is like, if you get a retracement back towards that like 140 or something like that, that's where you maybe reload. All right, what else you got?
We had a question about what do they think about Costco being down after rate hikes, after price hikes, excuse me. That was from Scott. So I think we addressed that. Here's one for you, Dan and Guy from Jack. Are Chinese stocks like Baba and Baidu a buy after the run they've had in the last couple of days? So Baidu's had a big run. Alibaba not as much, but it's starting to sort of peek its head up again. If you pull up an Alibaba chart, you will see in a downtrend that's now probably 3.5 or 4 years in the making. You've seen some bounces, some pretty meaningful bounces along the way, and I think you could be setting up for another one. So every time it sort of trades down to 70-ish, it's been support. Yeah, I think you can play these from the long side. It's somewhat counterintuitive because obviously what's going on in China. In their situation, but doesn't mean the stocks can't go higher. So I sort of like Alibaba.
Well,
here.
Let's talk about both of these names. And again, Jack, good question because Baidu was making new 52-week lows every day for like a month. If we want to pull that chart up, and then it just went up in a straight line from about 88 to where it is right now at $100. And Guy, you and I were talking about this name. We definitely talked about a market call last week, and we talked about it on CNBC's Fast Money. We're talking in relation to Apple and Apple Intelligence, right? So this is the thing that got Apple going up in a straight line from 192 to 230 or something like that. And we're talking about the fact that Apple's intelligence product will probably not be allowed in the form that they have here in the US. But in China, there was a rumor that they were going to talk to Baidu, right? And if you looked at the valuation of Baidu and you look at the potential basically for them and their large language model being the one that's used on iPhones, I think there's about 300 million iPhones, Guy, in China alone. Well, that might cause an upgrade cycle in China where, again, iPhone sales have been really stagnant. The last part I'll make is about Baba. They have a big cloud operation, right? So they could also benefit from, again, a lot of these large language models being used more aggressively by an iPhone user or not an iPhone user. And I bet you Baidu is prominently, situated there.
I think you're right about, I think you get, at this point, I think you can get more sort of upside bang for your buck in Alibaba, but what do I know? And you go back and look at Alibaba. You've had some 35 to 60% bounces on what's been this downdraft for the last few years, and I think we're on set up for another one. Last one from Scott A. Where do you guys think GDX can get to? So I actually looked at that earlier today. If you go back to the April 2022 high, I think it was just north of $40 or so. I think it got up to about 41. Amanda can throw up a chart. GDX is trading about 38 right now. So I think that's your first stop. And I think the next stop probably comes in the form of the summer of 2020 when it traded up to 43. So, yeah, there you go. So I think, I still think that, you've listened to me long enough to know what I think about gold and silver here. And by the way, silver's catching a bit as well. If you want to throw Pan American Silver, PAAS up, you'll see that that's had a pretty decent run too. I think it's up about 6% or so today.
All right, quick question, Guy, on the gold. You look at the price performance in gold today, it's up a little less than 2%. Big move in gold. Obviously, GDX is doing really well. Dollar's getting hit here, the Dixie. Okay, it's 104.45. It was trading just a couple of weeks ago, maybe a week and a half ago, at 106. The high from April was 106.5. So we're getting to some interesting support here. Is the move in gold, does it have a lot to do with the dollar, or what do you think? Obviously, rates lower, dollar lower.
The dollar becomes a bit of a tailwind, dollar weakness, but I don't think it's completely at all. It's not entirely predicated on a dollar move, but if the dollar is going to weaken here, it's obviously going to help precious metals without question. I'll say this before we get out. I started working in 1986. I was on a commodities desk, and right next to the commodities desk was a foreign exchange desk. What we saw this morning in Japanese yen, I don't think a lot of people have seen, more than a handful of times over the last 35 or 40 years. Dollar yen this morning was trading about 161.5 or so. CPI came out 5 minutes, maybe it's longer than that, maybe 15 or so minutes later. Dollar yen went to about 157.5. I mean, you do not see moves like that. And that was obviously, again, I'm not saying nobody did anything wrong, but there was orchestration around waiting for that CPI report to come in. And then whatever powers that be were going to crush whatever yen shorts were out there. And that's what you're seeing right here. So a fascinating move. And, Tim Seymour mentioned it on our Fast Money call, but it's worth mentioning here. Is this the beginning of the unwind of this yen carry trade? I have no idea, but when you see 2-3 standard deviation moves like you saw today, you have to take notice.
No doubt. All right, we covered a lot of ground here, guys.
I think so.
Yeah,
I enjoyed that.
Love the questions. Thank you.
We had
guys
Carter
for the
Worth. It's almost
questions.
like I forgot he was with us.
We had Carter. He was amazing. Guy, you were on fire. We just got right to it here.
Yankees won yesterday, so back on the winning track.
Finally.
That was one of those. Amanda's like, please stop.
I know.
But that's a game where, listen, they won 2-1. I don't make a big deal, but that's one of those stem the tide games. Like, okay, we can take a collective sigh of relief. Yeah. We're over the hump, and they can get back on their winning ways.
Yeah, no doubt.
Okay, unless you
one last question, guy, and this is coming from Dan N. First time, long time here. So you just mentioned you don't want to put too fine a point on what's going on here in the S&P 500, but if those large cap names, continue to go lower, and some of the rotation that we've seen right into some of these other groups, we could be on the precipice of something here. You know what I mean?
Just go back to March again. If you want to play that out, excuse me, go back Friday, March 8th, Dan N. Yeah. Was it Dan N?
Dan N.
That's you.
Yeah, he's here every day.
Yeah,
too.
I figured that was you. Go back to March 8th. Look at where things traded. Look at how things closed. Look at the few weeks after that. Yeah. And then look at the subsequent moves into the middle of April. And I think that's an indication of what we're on the precipice of now.
Yeah, we were only down 5.5%.
Yeah, yes. But
and we've also made the point.
But NVIDIA traded down, I think, 24%. Correct.
And so you would expect to see outperformance to the downside by some of those very crowded trades. Our friend Mike Wilson, who was on the Tape podcast from Morgan Stanley, that was a couple weeks ago, 2-3 weeks ago. He mentioned, listen, we have about a 10% move from peak to trough almost in every single year. We haven't had one all of this year. We had that 5.5% move. We did have one from late July to late October. So who knows what we're in for here, Guy.
I enjoyed that,
Dan
N. First time, long time.
Yeah, okay.
Bill Hockman is playing. Bill, where are you playing tonight? Anywhere good?
You can't hear him. You can't hear him.
There might be people in New York that might want to go see Bill Hockman.
Yeah, just Google him.
And you know what I was saying to Bill before? Yeah. It's not necessarily people work on their jokes.
Yeah.
It's not the jokes.
It's the delivery.
It's the delivery.
Oh, look at that.
And Bill actually agreed with me.
I've never heard you say that.
No, I say that often.
But he is, I think, Hockman. He is B. Hockman Comedy on the Instagram. Go follow him because he has some of his jokes out there.
I told him to use me as a foil.
You guys can decide whether you think he's funny or whether it's just the delivery. But go follow him on the Instagram.
I think he's funny.
I do too. All right, guys.
And I'll say this. I know you want to leave.
Yeah.
The smartest people, or I should say it the other way, the funniest people tend to be the brightest people. Yeah. And you go in and you watch. I mean, he's always reading.
But there are exceptions.
There are exceptions.
Right.
Bill's not one of them.
Yeah. All right.
No, but he reads.
Yeah.
People that are voracious readers tend to be very intelligent people.
You won't see Guy and me tomorrow unless something dramatic happens. We have PP on the morning. You started off the show saying that you don't think it's going to be a market mover,
but what the hell do I know?
Yeah. What the heck do you know? All right, people.
Later,
Thanks
peeps.
so much.